Aloha, this is Kurt Nielsen with eMortgage Hawaii, and this is your mortgage market update for the Hawaiian Islands for Monday, August 27th, 2012. Today, along with giving you a market update on mortgage rates, I do want to talk about housing. I talked to a lot of realtors, and half feel that the housing market is improving, and half feel it's not there. So I guess the real question is this recovery fiction or fact? So I'm going to start off by just going through some statistics and give you my take on where the housing market is going, both here in Hawaii and on the mainland. So if we start off and just look at the state of Hawaii, we're certainly better than most states. Statewide in July, single-family residence median prices were up 7%, and the median price for condos is up to 14% in July. If you look at each island individually, Oahu, the median price was up 7.4%, condos up 15.5%. On Maui, a big jump in single-family residence, median price 24%, condos up 0.0. Now, on an annualized basis, these figures are a little bit, quite a bit lower, but we are seeing on a month-to-month, it's really strong. On Kauai, Kauai's the only one that is really showing still a downward trend on single-family residences, down 3.6%, but look at condos, really a big jump up, and this is because condos took the biggest hit, dropped the most, now they're recovering the fastest, so 33.4%. And on the Big Island, between east and west, east is still showing some slight decline. On the west side, though, we're seeing single-family resident median price up 3.5% and condos up 12.75%. So a lot of good information showing that the Hawaiian housing market is doing quite nicely in its recovery. Now, if we look at the nation as a whole, we look at new home sales. They're up. 372,000 from 359,000 the month before. That's a nice kick up. And I think the reason new home sales are up so much because people are getting a lot of value for a brand new home. They're energy efficient, and the prices are very competitive. So the builders are keeping the prices, the cost down. Existing home sales up also 4.47 from 4.37. Prices nationwide were up 0.7%. Not much, but nice for the whole nation. And then the other thing that you have to look at is really the building permits are up now, so builders are starting to take some risk in building new homes. Housing starts are up 746,000, and this pushes us, if we could sustain that for a year, well over 1 million homes a year being built. Now the other important thing is inventory. Inventory is now down to below, the housing crash numbers. We're down to 6.4 months. Now there is some shadow inventory, but if you start looking at the numbers, the shadow inventory is not going to be a problem as long as it's released in a pretty smooth way by Fannie Mae and Freddie Mac and the other banks. Again, all the numbers are showing pretty strong improvement. This is a really important chart here. So since 2008, for the first time since 1959, housing starts drop below 1 million, and they've remained there for 5 years. And I expect that at the end of 2012 will be just around that $1 million mark. In order to keep up with the U.S. population growth, we need to build 1.6 million homes a year. So this reduction in home starts is a very significant reduction over what we need to sustain housing here in the United States. So there's going to be, we may actually get behind where builders are going to take time to ramp up to get back up to the 1.6 to 2 million homes a year, and there won't be enough inventory for demand. And I think that's where we're heading. We're going to talk a reason kind of for why the demand should start picking up. So looking forward, I see the the inventory of homes for sale is dramatically lower, especially in Hawaii. It's the biggest complaint I hear from realtors around the islands right now is that they need more inventory. And I think the reason for that is we're sort of in the doldrums. All the people that had to sell have sold. All of the people that didn't have to sell are waiting for prices to increase. So, that we're sort of in that in-between period where prices have got to increase enough to inspire sellers to, start listing their homes. And I expect that's going to start happening probably significantly at the beginning of 2013. The international demand for homes in Hawaii is coming from China, Canada, Japan, Australia, and this is due to the low prices here in Hawaii and the weak dollar. I expect the government to keep rates artificially low through 2012 and through the elections, so I think we're going to have a nice low rates for at least 4 or 5 more months. And nationally, there is a huge pent-up demand, and while a lot of the buyers aren't into the market right now, you're going to see more and more as credit issues fade because the buyers are getting enough of the bad credit behind them. So you're going to have newly eligible buyers, month after month. It should begin to pick up as they get their credit woes further and further behind them in their rearview mirror. So I see that pent-up demand really breaking into the market in 2013, as long as the economy doesn't fall off a cliff for any reason. Now remember, we need 1.6 million homes built per year to keep up with population growth. So I'm beginning to think that housing is going to be the backbone of our recovery. If we can get housing starts up around 100,000 a month, I think that will employ a lot of people, a lot of paychecks, and will begin to push the economy forward. So now let's just talk about where mortgage rates are. They still are holding at close to those historic lows. We're not quite at the lowest of all time, but we're very, very close. So right now, a buyer can get a rate at 3.25% with a fee of 1.125. That's pretty reasonable for this low rate. When we look at what's happening in the markets, some good, some bad. The crisis in Europe still is worrying investors, and they're really no closer to solving that problem than they were 3, 4, 5, 6 months back. They're still talking about Greece leaving the European Union, Spain and Italy. The central bank is really supporting them through bond purchases. So some are arguing, like in Germany, that all that is a loan to those countries, and that violates the rules of the central bank. So, I think Europe is going to continue to haunt us. Also, negative news is unemployment. Still not improving. We're got an 8.3% unemployment rate. Claims each month are like 370,000 people. So, still not there on the employment side, but maybe housing will help to improve that. The Dow Jones is remains above 13,000. Who would think? So there's still a lot of optimism in the stock market. I do believe the Feds are going to act one more time in some kind of stimulus, a QE4 or 5 or whatever you want to call it. That may happen, or we may hear something about it this week. And the other problem I think we're having is businesses are just not hiring due to their wait-and-see attitude on the elections. So they're waiting to see what happens with the elections so they can start, their business planning on hiring. We have had an uptick in consumer confidence. And again, I mentioned that Feds are going to keep rates down with this new twist program where they're selling short-term bonds and buying long-term bonds. That's pushing that 30-year fix down, to where the levels we're at right now. Again, the U.S. is still the best home on the block in terms of where investors are fleeing to put their money. So, again, some good, some bad, but hopefully the housing sector will help us improve our economy here. And this is just a chart of, mortgage-backed securities, i.e. interest rates. Remember, the bond market goes in reverse of the interest rate. So, for, a good long period of time, we saw rates going down. We hit the all-time low on July 24th, and then rates started going back up. And then finally, last, about a week and a half, we've seen rates start to recover a little bit. So we're back up close to those all-time lows, but still not there. But again, some improvement over the last week to 10 days. So again, I see rates kind of hovering where they are today without having to see, without any big news about the economy. And here's a chart of the 30-year fixed rate. You can see, about 3 or 4 weeks ago we had this big spike. Interest rates started going up, and then the last 10 days we've seen them go down again. So, and again, the national average is at 3.55%, where eMortgage Hawaii is at 3.25. So again, that's just a little profit taking going on by the banks. Less competition out there, fewer mortgage brokers. So we just end up here's our rates today. 30-year fixed at 3.25, 15-year fixed at 2 3/4. 7-year ARM and the 5-year ARMs haven't moved in probably 3 months, 2 3/4 and 2 3/8. Jumbo rates are still extremely great. Everything's below 4%. 30-year fixed at 3.875, 15-year fixed at 3.25, and again the 5-year and the 7-year ARM haven't moved either on the jumbos. So overall, exceptionally good rates. Low rates and low prices. The buyers ought to really move into the market. So again, my forecast for the rest of the year, rates will stay between 3.5% and 4%. I think the economy is still struggling, although housing may become our cornerstone of recovery. Foreign buyers will continue to support the Hawaii housing market. Rates will stay low with Operation Twist, and I see the outer islands continuing their strengthening. But I think the big push in the outer islands will be in the first quarter of 2013. Anyway, it's a good time for buyers, and a good story that prices are starting to rise, so they better move. Okay, and as usual, if you want my free mortgage calculator for your smartphone, it does calculate mortgage payments for you, pre-qualifies your buyer, and it provides my mortgage rates every day right there on your cell phone, so you can forward those directly to your client. If you'd like to download it, go to your app store, search for Loan Apps, download it, and activate it using my cell phone number without the dashes, 808-896-6800. Again, if you have any questions or you want me to speak to your borrower about loan options, you can reach me 7 days a week at 808-896-6800. Otherwise, aloha.